Hi everyone, thank you for joining us today with our esteemed speakers. This event is hosted by IEEE as well as CASPA. I'll be giving you a brief intro of IEEE Young Professionals. So we're a social, technical, and we host networking events targeted for those who graduated within the last 15 years. We have about several hundred members in the San Francisco Bay Area, and we're one of the more than 30 different organizations within the Santa Clara Valley section. Some of our social events, including happy hour, hiking, and we're just starting to have offline events as we're starting to open up. With regard to technical events, we focus on hardware, software, robotics, and AI. Those are some of the major themes that we've had in the past. And in terms of technical events, YP usually have a major conference in most major conferences, such as ISSCC, TAMS, and GHCC. With that, I'll pass to Joseph Wei, who will share with us IEEE Startup Special Interest Group.
Okay, so I'll share my screen. Okay, welcome everyone. I'll give an introduction about the Startup Special Interest Group as well as the IEEE. And so if you're not IEEE member, IEEE has been around for many years. It has about 400,000 members in about 160 countries and runs about 1,600 technical conferences around the world. And it also has a lot of publication and it's one of the top cited periodicals for its Spectrum magazine. So if you look at the statistics, especially now with the topics about patents, it's referenced 3 times more than any publications for the people who file patents. We found the Silicon Valley Startup Special Interest Group really is to foster a network of experience and also budding entrepreneurs to share ideas and best practices and to collaborate on startup opportunities. And the program will be monthly webinars like this one. And also we are planning on working also with the Life Members Group, which is the IEEE Life members are people over 65 with 35 years of membership. So total number of years is 100. And a lot of these are very experienced entrepreneurs as well. So we'll come up with a program where we'll match the mentors and the mentees these resources from IEEE. And usually once a year, we also organize a startup pitch competition. Here are the 2 website or the QR code. If you take a minute, if you want to check out the website, you can use your phone to scan the QR code, or you can click on the second QR code, and that will take you directly to the website, the link to sign up to receive our email notices of future events. And these events are put together by a team of volunteers from IEEE. So here are some of the volunteers on this page. And next month, we will have actually also a topic related to the fundamentals of IP, intellectual properties, what inventors and entrepreneurs need to know about actually, I missed out the part, IP laws by Patient Ren from Latham and Watkins LLP. And you can also scan this QR code to register for this event. It's going to be on July 1st. If you have any suggestion, interest in volunteering, you want to join IEEE, this is my email address. Feel free to shoot me an email. Thank you very much. And next, I'll let Avery to introduce our co-sponsor for this event, Casper.
Okay, so let me see. Yes, so in addition to IEEE, I actually serve as the head of Founders Club, Entrepreneurship, and Board of Directors at CASPA, the Chinese American Semi-Professional Association. We've been around for 30 years, since 1991, since our inception in Silicon Valley, and have grown since with 11 chapters around the world, 6 in the US. We have 50 plus corporate sponsors from the usual suspects in Silicon Valley, and greater than 6,000 members. And is a volunteer-based nonprofit organization. So all our working professionals, different levels in the corporate and startup world that actually volunteered their time to push forward semiconductors and industry and bridge between here and globally, including Asia. So really our mission is to foster communications and networking. And also we have career events to help our working professionals, and as well as executive leadership and events like this for entrepreneurs and startup professionals and innovators. We have many different public events. I won't spend too much time on this, but you can go to caspa.com. But we have our annual conference and 2 other symposiums throughout the year covering different things, whether it's AI, robotics, IoT, the latest on different semiconductor technologies and applications that are interesting and relevant to our attendees. We also have entrepreneurship events like this, and really the Founders Club is intended to help people who are really interested in doing a startup for the very first time, or even existing entrepreneurs and innovators that are looking for help, including information on IP that we're going to talk about today. We've had keynote speakers every year from CEOs from Mentor, Xilinx, Applied Materials, all the way down to NVIDIA, AMD, Broadcom. So please, check out our events and see if it's something of relevance, and you can definitely approach me for these. Again, we hold large conferences and symposiums in the Bay Area, and right now with Zoom, actually accessible around the world. Again, career development. We actually have one of the few last physical until recently job fairs in Silicon Valley. And then, of course, we have different seminars. We also help the community and give back by providing scholarships to high school seniors that are going to college, as well as Education Day to help groom our next generation of tech innovators and leaders. And we have different business delegations to Asia and China. And as you see here, Dr. Chen Min, who is actually Berkeley professor and actually well known for his work on FinFET technology. So again, you can check out caspa.com for our events. And thank you for hearing about this. And if you want, you can scan one of these QR codes, or you can reach out to me. Thank you. And I think without further ado, the next thing I'd like to do is introduce our speakers for today. So we have David Van Wee and Stan Hanks from Aventurine Capital Group. And so David actually is founder and chief investment officer. He has led both and advised companies from founding to exit. He's actually co-founded 7 startups prior to Aventurine, including 2 resulting IPOs. And his claim to fame is Intertrust, which pretty much is a company that wrote the industry standard on digital rights management. So the joke is that every time you stream a Netflix video, you need to send David a fruit basket. Well, basically, he has extensive experience as both an entrepreneur, innovator, trying to raise funds for his own ventures, as well as now trying to use his expertise and experience in IP to enable other innovators and startup entrepreneurs to be successful and to value IP as an asset. Our second speaker, Stan Hanks, is our general partner in technology. Stan also comes with a very extensive career. He's been at every seat at the table. So starting out as an entrepreneur, researcher, instructor at Baylor College of Medicine, Rice University, and also his background, he pretty much helped develop the internet as we know it. And as a result, he's also gone into starting his own ventures and has had 14 startups with 9 exits, 5 IPOs. So he really understands both the struggles and challenges as an innovator and entrepreneur, as well as someone sitting on the other side, trying to evaluate deal flow to see, what are the next investable ventures that might fly, from a VC and private equity standpoint. So without further ado, I'd like to let Stan take the baton.
Thank you so much, Avery. I really appreciate the introduction, and thanks so much to the IEEE Santa Clara Valley group and young professional SIG and the startup SIG. It seems just like yesterday that I was a young BSCE joining the IEEE, but in reality, that was a really long time ago. It's been a great organization to be associated with. So Avery covered things pretty well. I started off as a practicing engineer and moved into research, and from there became more interested in, instead of how to make cool new stuff, how to make cool new stuff make money, and that's largely defined most of my career since. I've met David through patents, actually. I was running a group at Enron Broadband, and we had basically built Netflix in 1997. And the problem I ran into was that no one would let me put movies on our system because they knew as soon as they were digitized and put on the internet that everybody would copy them and no one would ever make any money off of them. So I was working with a group up in Seattle that had a technology that looked promising, and we'd integrated it into some of our base platforms. And I drove up for a meeting one day and discovered that they were closing down their offices. And when I asked why, they'd said that they'd been given a cease and desist from this outfit called Intertrust. And I find it somewhat amusing that here we are almost 30 years later, and David and I are partnered in trying to make the world safe for inventors again. Hey, David, so talk to me about patents. What was your first exposure to patents? How did you get on the bus?
Well, thanks, Stan, for the intro. You know, my interest in patents, I had I think a layman's understanding of the subject as a boy. My dad was a commercial scientist, so the topic came up. But I really got my first exposure when I'd been recruited into a CD-ROM manufacturing facility. Now, that was a big deal back in the late 80s and early 90s. That was deep tech. That was high technology. But that wasn't exactly why they brought me. That was one of the things they needed from me, but they had some bigger issues as well. And that they had gone and created this factory, and they had only booked it to about 40% of its capacity. So when they brought me in, now I was good friends with the chief engineer at Capitol Records, and he was one of the first people they brought in as the kind of the SEAL team to try to fix this. And he brought me in to help out on the technology and some of the business dynamics. Well, one of the things I discovered there, having the temperament I do, is that the manufacturing facility for these things is a clean room. They wear bunny suits. Yet there's a whole manufacturing operation in there that is stamping out, at an industrial rate, injection molded polycarbonate plastic. So I was fascinated by all that. One of the things I learned about it, though, was that there was a kind of a hidden dimension to all this, which is that every time we pressed one of these discs, we owed Sony and Philips 4 cents. And this struck me as a very interesting thing indeed. That struck me as a little bit like money for nothing at first. But then I got to really appreciate and understand what it meant in the market. It provided a means of standardization as well as a return for the people who had invested in creating the technology. And of course, I was very curious about the people who were running this outfit. I thought, what a great line of business to be in. I really want to know more about how this works. And well, that relationship, which started back in 1989, continues today. Intertrust is owned by a consortium of Sony and Philips. After the company had been public for a number of years, they acquired the business and brought it back private. But for me, I really discovered the world of patents from the bottom up, rather than as a researcher going through a process. I discovered that this was a fascinating way to really make money and monetize research.
I love that view on it, because ultimately that's the reason patents exist. The title of this talk is a new renaissance in IP management, and patents date to the Renaissance. The first patent laws were in 1474 in Venice, and the Venetian glass makers had discovered how to make glass mirrors, silver-backed glass mirrors, and no one else in the world had it figured out. And the Doge became incredibly concerned that something bad might happen to his glass makers, and the Venetian primacy might fade as a result of that. So he offered him a deal. You tell us how you do this. It's currently a super deep secret, and we'll make sure that nobody else but you gets to profit from it. That's the origin of patent law as we understand it today. But patents don't really come with that degree of sort of imperial protection with them anymore. David, would you, well, before that, in the United States, patents have always been taken extremely seriously. Patents are baked into the Constitution. Article 1, Section 8 provides for patents. Freedom of speech is an amendment. So think about the relative primacy in the minds of the founding fathers. Patents baked into the Constitution, freedom of religion, freedom of speech, all that stuff, that's off in the amendment somewhere, right? Today, things are a little murkier. So what is a patent really? What do you, how would you describe that? What is it? I have a patent other than a shiny thing to stick on my wall with the other shiny things. What does that do for me?
Well, a patent at its essence is really no more than the right to file a lawsuit. And so when you're thinking about patents, you're thinking about who might be using this technology and framing that both commercially, and then ultimately there'll be a legal framework around it. But the goal in the world of patenting is really quite different than it is. I mean, the IEEE published my first paper, so I'm a big fan of that approach, but it's very different from what you do when you're trying to protect your intellectual property, where it's actually really important that you limit who's aware of the information, and you put it through a process that allows you to really rigorously find the pieces that belong in a patent and the pieces that maybe should be kept secret. And so a patent is one of many tools that you would use in order to protect your research. And again, there's other elements of it too when you go into developing your intellectual property. It's important that we're talking here about intellectual property, because patents themselves are one crucial element of that story. But especially in today's world, as you alluded to, Stan, the climate for rights holders in the United States over the last 10 years, since the American Invents Act, has really changed. And it has moved towards the serial infringers and away from the rights holders. And that balance requires you as a strategist to rethink your approach. Now, doesn't mean you don't want patents, but it definitely elevates the importance of trade secrets and a really coherent strategy that ties your business ideas together with your intellectual property right at the heart, because it's harder to enforce patents these days. You have to be more careful. However, at the same time, good patents are worth more than they've ever been worth. So it's a mixed environment, but in many ways, I'll just say one last thing about that. I mean, it's really been a profound series of changes since we had the Alice ruling, we've had the oil states ruling, and now, well, it's not directly patent related, but we had the Google versus Oracle ruling. So now in broad brushstrokes, you may not be able to patent it, you may not be able to copyright it. You're going to have to be careful about how you approach intellectual property in this climate. And you know, we've lived it. I've had both the upside and the downside on the intellectual property front. If you get it right, it produces wealth that you can then feed right back into your research. Intertrust is still doing research today based on this principle. They continue to fund active research. But if you don't, you can end up actually losing your rights. And part of the American Invents Act is to say you have to go to the patent office before the clock starts. It used to be, back in the good old days, that inventing it was the thing, and you could prove when that happened. And if you were able to do that, well, you were first in line for patent rights. But in today's world, we're working from a different framework where it's the first person to show up at the patent office. So there's elements here that really have made the world more complex, but again, they've also ended up with a global marketplace where a lot of these intellectual property rights are respected around the world, and you can actually produce very, very lucrative assets for your investors. And in the process, you can see your technology widely utilized. Because making a lot of money in the world of patents means people are using your stuff. They like it enough to buy it in a product, and it's widespread.
Yeah. Before continuing, I want to note that if you have questions, those of you in the audience on this, please type them into the chat. Avery will harvest those, and we'll have time for Q&A at the end. But I want to make sure that we have a chance to address anything that comes up. But let's not interrupt the flow of where we're going with this. So patents are one of a variety of tools that you use to protect your intellectual property. But as you note, it's just a license to litigate. It's really a letter of marque from the government that says, in the event you catch anybody, thank you so much for disclosing this valuable invention. In the event that you encounter anybody that's infringing on your rights, you've got the right to sue them, and you've got standing. But that doesn't fully cover everything, because, as you know, there are things where you might not want a patent. It might want to be a trade secret, because the nature of the patent is that trade-off. You tell us what you know in a fully descriptive way, so that an unskilled practitioner can make another one of these things. And in exchange for that, we'll give you some measure of legal protection. But you don't find things like, say, the formula for Coca-Cola or Harlan Sanders' 11 herbs and spices being patented, because patents have a life. So I've heard you say that the most valuable patents achieve their maximum value in their final year. Would you care to talk about that a little bit?
Yeah, that's an important point that helps distinguish the patents that are really valuable to invest in and over time, and versus the ones that have maybe a more utilitarian and short-term purpose. So a foundational patent is one that is going to be baked into the stack. It's going to, the underlying material represents a fundamental engineering insight, usually based on a fundamental scientific insight that is, once built, is likely to be used over and over again. All of us as engineers have had that experience. We always start with the tools that we have available, so that we can build our unique things on top of that. When you create a foundational application, though, each year that it's utilized, as Stan said, you're going to see that hockey stick proceeding, and you can see this in foundational technology one after another. It takes a period of time. That full 20-year term that you have available today for your patents, your best year is going to be year 20, and that changes everything. I mean, again, we have a great audience here of people who are familiar with how things work over time in the time domain when you're designing a system. And one of the key insights that comes from what I just said, one of the implications of that, is that you need to think about your intellectual property portfolio differently than you think about your startup. It doesn't mean they're not part of the same effort or the same people even, but the time scale that you work with in startups is measured in weeks. And the time scale, as I just mentioned, year 20 is your best year. The time scale on the IP portfolio is measured in hundreds of weeks. So you could have a 10-year cycle on one hand and a 2-week cycle on the other. And because of that, you are faced with a fundamental management challenge, which is, how do I deal with one set of my balance sheet, my assets, running little company, or I hope to have a little running company, and an asset that is going to last for decades? Because even your most successful startups don't normally last decades. Usually the merger or acquisition, the public offering will come in that 5 to 10-year window. So the intellectual property, kind of a key measure of this, will live longer than your startup, even if your startup is very successful. And in the unlikely event of a water landing, you should be prepared for a startup that doesn't work, and it doesn't mean the research didn't work. And this is one of the big pitfalls. You can have beautiful, excellent research, and maybe you didn't have quite the right team. Maybe you went to market a little too soon. Maybe you picked the wrong spot to go. If you're not careful, the totality of the value of your IP can end up going down with that ship. And so there's really valuable lessons to be learned as a planner to focus on these two things separately. And it's not reasonable most of the time for people to try to do these two things together because the priorities are different. So one of the things that we've been focused on at Adventuring is just finding ways that we can separate these two things without isolating them. separate them, yet keep them closely coupled together so that we can manage these two things independently as financiers. And then that means the entrepreneurs and the inventors who are working with us have a financial partner who understands these dynamics, because your classic venture capitalist will simply ignore this. And let me make a point about why it's not wrong. So when I started in this, when I first discovered that venture capitalists won't invest in these kind of companies, I was confused. I didn't understand why, because I saw what happened with Intertrust. I saw how the economics work. Yet exposing that to venture capitalists wasn't persuading them. We had to find alternate sources of financing. Now we did, as Stan said, we went on to multi-billion-dollar valuation. But to get there, we went through this non-traditional route. But what I discovered after some analysis, and I did another one of these companies just before venturing, these tech companies with tons of IP, really interesting research. But in the intervening period, I did some what you might call more normal companies, more traditionally structured. So those differences really leapt off the page as I got into the second one of these companies, and it really it identified for me both the need to manage these two assets independently, as well as the kind of the core value that comes from a focus on both product and intellectual property in isolation. So that's kind of a long answer to your question there, Stan.
Well, there's a lot of dynamics in this. When I first my first raise was in 1984, four, and it was literally me having a slice of pie with a guy. Me and one of my partners having a slice of pie with a guy at House of Pies in Houston, Texas. Drawing a diagram on the back of the placemat, handing him our resumes and some of the papers we'd written, and we got a check for like $3 million. That stuff doesn't happen anymore. It's crazy. When David and I started talking about this around 2012 or so, the initial thought was the genesis was denominated around the idea that there's something wrong with the system because venture capitalists are not funding deep tech science startups anymore. And we need to fix that. And the initial plan is we're going to start a fund just to do that. And that didn't go terribly well. The learning around that was alarming and super interesting and highly informative, and has helped me with the rest of my venture investing and advising as well. When I got started in this, up until sometime in the early 2000s, it was normative as an LP in a venture fund for you to sign a partnership agreement that basically said this partnership exists for a period of 10 years. In the event that there's still outstanding business at the conclusion of the 10 years, the life of the partnership is extended automatically for 5 years. At the conclusion of the 15th year, if there is still business that is outstanding, the partners may, by agreement, extend it for another 3 years. So effectively, as an investor, when you sign up to join one of the classic venture funds, Kleiner Perkins 2 or whatever, you're in for 2 decades, 18 years. Fast forward to circa now, as a limited partner, the partnership agreements are 5 and 2. It's the length of the fund is 5 years, and there's an opportunity to extend it for 2. And as an allocator, as a guy that works at a fund trying to make decisions about where to write checks, a lot of decisions are completely off the table for me now, because when I look at the deal, it comes in, I have to put on my thinking hat and say, when's this thing going to exit? Because at the end of the day, if I write a check for something that's not going to exit during the life of the fund, I've screwed up. So now we're investing in Flappy Bird and SaaS and things that have a short cycle time. But we don't have the opportunity to invest in the longer cycle times. There's been some emergent deep tech companies, but investors, but for the most part, there's a giant gap between applied research that comes, where we've taken foundational research and turned it into a thing, and I've now got a thing sitting on my bench that I want to turn into a product, and getting that to the point that you can get a check from venture capital. Which gets to another point in this as well. The income from patents is royalty income. So on a tax basis, that shows up as something called ordinary income. It's not dissimilar to the income that you as a working professional make. It comes in on your W-2. It gets reported in a special line on your K-1. Venture capitalists are not super interested in income. They're interested in capital gains. Capital gains takes place over a longer period of time and is taxed differently and is highly advantaged in some ways. And you get capital gains by buying a piece of something and then selling that at a future date for a lot more money. And they're orthogonal. It's a different goal. If you talk to your typical venture capitalist and say, well, I'm profitable, I'm throwing off cash here, they'll tell you that you're doing it wrong because you're not reinvesting that. You should be spending more than you're making, investing in hyper growth so that the thing will be worth even more down the road at some point. And that gets back to this dynamic tension of needing to think about my income producing 2-decade life cycle asset as different from my operational concerns about what I'm going to do in the next week, in the next quarter, in the next year. But back to this notion, patents are clearly valuable, but how do you value a patent? How do you know? Now, I'll tell you, I've struggled with this myself. As part of my career, I wound up in private equity for about 15 years. And as I like to characterize it, I was the Sanford and Sons of the internet crash, buying companies that had failed in the telecom nuclear winter. And I'd wound up with these patent portfolios as well as the operating companies I was trying to turn back into actual operating companies, and find myself going, well, what the hell do I do with this now? It's what's it worth? Who do I sell it to? How do I make that work? So you've had super valuable patents, David. How do you value a patent? How does anyone value a patent?
Well, you brought up a great question right at the outset of entering. One of the challenges was answering the question that you just asked. How can I begin to put some numbers on the value of intellectual property? If we're going to put a financial scheme around it, we have to have some numbers. Now, there'll be error bars. There always are. We're talking about the future, and we're talking about things we can't directly measure. But one of the things I discovered was that the world of patent valuation was just terrible. It was a bunch of thinly disguised Bayesian statistics that were really no more than an educated guess by the practitioner. Now, it took me a number of years to get to that conclusion. That isn't how they're presented. But what I discovered is I could not get reproducible results using the model. And so a number of years of research went by on my part as I was banging my head against this particular issue. And then I reached a conclusion. I began reducing my data sets using a little bit different strategy. And I discovered the problem is you can't value a patent. You can't do it. If you put a patent in isolation from the trade secrets, from the product, and from the business and how well known that company is, if you try to separate those things, you simply can't get your numbers to converge. You won't get a valuation to come together. As soon as you begin taking into account all 4 of the elements that I just described, on the other hand, you can start to get the data to reduce nicely, and you can start to make much more accurate predictions about what a future transaction is likely to be worth. And I'll just make one more point on that because we are in the time domain. I'll just we have a mathematical crowd. I try to avoid using too much math, but when you look at the return of a patent or an IP portfolio, you'll see a slow growing exponential. And if you arbitrarily draw a line at year 7 or year 10, the fat part of the curve is left out. So when a venture capitalist tells you that your IP shouldn't actually contribute to the valuation, they're being incredibly rational. They're saying the financial product I have does not care about return after year 7 or year 10. It's 0. So the net present value that they apply to that is approximately 0, and it's actually correct on its own terms. This was the case where the venture capitalists were right. I was wrong, because it isn't just about those economic opportunities. It's about those return characteristics that you were just talking about, Stan. And it's also, we came up with a scheme now that we're able to use to really do much more rigorous valuation, but the venture capitalists don't have that. We use it internally. We don't publish how to do this. One day we might publish how to do it. In the meantime, I think we'll use it to make better investment decisions than our peers.
Yeah, let's hope so. Some of those guys aren't doing terribly well. So back to that, though, it's important to note well, so I read a study recently that said over 70, this one particular government agency was noting that $70 billion went into basic research in the United States, on which the economic return was approximately $2 billion, right? So not that spending a crap ton of money on supporting research and having foundational things happen and educating and training and paving the way into the future isn't important, but that kind of seems like a crummy return, right? And part of that is that there's no way for people to pick up that research and get funding to take it into the next step. There used to be. You know, the gray beard has a point here. That used to exist. That used to actually be a thing. That was the lifeblood that built Silicon Valley as we know it today, and it's not happening right now. So we're thinking about things from that perspective. But so you said that there's the four things that you have to value. So you're looking at the patent, and you're also looking at the trade secrets, and you're looking at the trademarks, and I forget what the fourth element is on that.
The product technology that's neither patented nor secret, but yet works, right? If you have something that works, it brings up the value of the intellectual property across the board. If you have something that's trademarked and well known, it brings up the value across the board. It's why you can't isolate each of them. The challenge is patents are so easy to measure. They're full of metadata, and you can count them so readily. It leads to that cognitive bias of a lot of things in science and engineering, is that the tendency is to analyze the data that you have available rather than get to the bottom of the issue and get to the heart of the matter.
Right. I was talking to an inventor just yesterday who has a product that changes what they're doing because everybody else has made the observation that, well, this is the thing that I can currently measure, so I will build my data off of that. And he changes the game by changing what you actually measure. And by getting that, you wind up with a whole different suite of data. And this is one of those cases where that fundamental observation that you have to take this in the context of the business and the technology. I'm going to use that to segue into another thing about patents and patent counsel, particularly patent attorneys and patent agents. The patent basically is an exclusionary device for whatever's in it, right? So the claims that you make in the patents are the things that you have the ability to litigate around. Why is it that so many patents read like science papers, talking about extolling the virtues of the shiny as opposed to talking about the commercial aspects that you'd probably want to protect? And isn't that a giant disconnect?
Well, it is. I'll share one element as a data scientist that I really appreciate about that, which is most patents are worthless. In fact, they're worth less than zero. They cost you fees to keep, and they don't have any meaningful commercial value. So I'd say that the first thing I'd note is that most patents are not going to be valuable. And then you begin to work back, what do the really valuable ones look like? What are the characteristics that they have? And number one, they tend to come in clusters. They tend to have applicability across more than one business area. So these are the kinds of things that you need to really zero in on, I think, to get to the bottom of your question.
Well, you talking about clusters makes me think about where clusters usually show up in my world, at least, and that's that when you try to litigate a patent. And this is hopefully this will be stuff that gets covered in some additional depth in the event that the IEEE is having in July with Latham and Watkins, but. One of the things that you really run into is with all of this, at least in my experience, is you have to start with litigation. If my patent is a license to litigate, then thinking about my patent from the perspective of what do I want in it when I'm standing in front of the judge in 7 years when somebody infringes? What I want it to say, how do I want it to read? So what are the important characteristics around that?
Well, right. The first thing is that most of the time, you're going to want to create what are colloquially called kitchen sink patents. And these will not be easy to read. They're not designed for clarity. They include lots of long lists. They include lots of bulleted items where you explore all of the myriad possible ways that this particular invention could play out. And the reason you're doing that is just for the reason that you indicated. You don't know a few years down the road exactly which one of these angles is going to be the most likely. You have an idea of the most likely ones. You're going to run your business potentially, try to make it real, but you don't know for sure. And so a well-designed patent will give you the ability to adjust where you're taking your claims. Now, the claims that's the heart of the patent. That's the thing, the four walls of which, the four corners of which other people, if they do all the elements of the claim, they could very well owe you a license fee. So deriving those claims it's really helpful if you have a look at how the market is actually using your technology so that you can draft your claims to target that carefully. So one thing you want to do is have a more of a comprehensive approach on your foundational patents to make sure that you invest not in literary quality, but in providing yourself a claim factory for later that'll let you design claims that are right on point. The other thing you need to do to keep that going is you have to keep your file folder open. When there's a risk that when your patent is issued, that if you don't take action, that file at the patent office is going to be closed. But if you do take action, you can keep a whole variety of patents coming forward. You can't change the specification, but you can generate new claims. And so these are, you put these two together, give yourself the raw material that you need, and then keep your options open over time so that you can really develop the family of IP over time. And if you do these two things, you've begun to tilt the model in your advantage. You're beginning to take advantage of some of the things that you as a rights holder can still do in the constant struggle with the serial infringers.
Well, yeah, and keeping the folder open is a critical trick because that also keeps you from needing to have previously invented a time machine so that you can see how it's going to be used so that you can write that into the original claim structure.
Exactly.
Which, so far as we know, no one's done that yet, but if they have, it's a trade secret. But that gets back to that interesting thing because previously, prior to American events in 2011, the spirit of, well, let me back up a little bit on this. So you've probably all heard the term patent troll, right? So in 2000, probably 6 or 7, I wound up as part of one acquisition with this company that I wound up breaking up into pieces and standing part of it back up, and they had a whole bunch of technology around voice telephony, and that included a facility that they resold to other people that enabled a click to call feature on websites. And as soon as this thing hit the streets and we had it back up and active and in the market, I get sued. One of the notorious patent trolls out of East Texas noted that we had something that said click and call in the same sentence, and we, by God, had to be infringing on their patent. So we get sued in East Texas, which is a great place to sue somebody for infringing. Despite the fact that we didn't have any standing for us to be sued there, it was, so I wound up fighting that for a while. And getting into the whole thing, I discovered that one of the pieces of fallout from the .com bust was that all these companies that had died, that had patents that were part of the corpus of the company, were bought at auction for pennies by people that were speculators, and then they just waited because they figured that some of this stuff would be useful someday, and waited like the troll under the bridge, hence the patent troll analogy, for somebody to infringe. They didn't spend much for it. They're going to wait, then they're going to sue, and they figured that if they do enough of this, their demand letter, and they keep their demands to something kind of semi-reasonable, 50 grand, 100 grand, that they can collect a boatload of cash by just annoying people that may not actually be infringing, but would have to marshal the resources to go fight the legal battle. And it's important to note that that's a piece that contaminates the way a lot of people think about patents going forward, because now it's somehow or another a patent that is owned and by the operator of the company that is practicing the patent is seen as clean, and a patent that is owned by a non-practicing entity or a patent assertion entity, even though the owners of that entity may actually be the inventors, is somehow contaminated and has this trollish behavior. But that's an ethical and metaphysical kind of argument. The reality is whoever owns the patent gets to collect on the infringement, and how that's distributed is a function of the business structure that created the entity that's doing that, which is an important thing to think about as we talk about separating the time domain here. So one of the things that come up with that, though, is what happens when you litigate now, right? So before America Invents was put into place specifically because the patent trolls, these speculators that had acquired all these patents, had stopped going after mom and pop shops that they were $50,000 to death, and started going after the tech giants, Google and Microsoft and Apple and those guys. And those guys had enough money to have a really effective lobby in DC, and we wind up with an opportunity through America Invents to have to ask for an inter partes review of the patent, which basically is a chance after the patent's been granted for somebody to come in and try to invalidate it. How does that change? How does that change things in terms of how you need to think about building your patents and protecting them?
Excellent points. One of the things that you can do, we mentioned IP clusters earlier, and you've just identified one of the big drivers behind using a cluster, and that's to improve your odds that at least one of the patents, at least one of the claims and one of the patents is going to survive the process. There's you used a statistical model. It's not purely statistical, but there's definitely the case that if you come in with 7 or 8 patents with interlocking fields and potentially somewhat different inventors, depending on which element of the system you're really focused on, you take away a lot of the tools that are used by the serial infringers to invalidate patents. So once you put a portfolio in place, if you've designed it well, you're going to reduce even the likelihood of trying to use that mechanism. It's cheaper than a lot of the alternatives, so you should expect that you're going to go through that process, but you'll really improve your odds if you do that. And it also underlines the importance of why in today's world the trade secret is simply more valuable than it used to be. Now, I'll also point out that this undermines the foundational principle of the patent system, which is that you teach people how to do your brilliant thing, and then for a period of time, only you can do it. After that, everybody can do it. It enters into the corpus of human knowledge, and anybody can do whatever they like with it at that point. And the trade-off is society wants to know, civilization wants to know the best thinking of its brightest people. And the patent system, as laid out in our Constitution and practiced particularly in the United States, was really very efficient at doing that. It also led to some of these complexities around the enforcement and the way that people abused that process. And then, to further your point, the effort to correct the legitimate issue of abuses of the patent system turned out to be a little throw the baby out with the bathwater. I mean, we took a patent system that had generated more wealth than the rest of the world combined, and we said, okay, let's use the rest of the world system instead. And we're still paying for it. But again, we have the magic. If you think about the music business, we have the hit records, right? We have the stuff that everybody needs. And so if you're strategic about it, there are ways to be able to get that value and to recognize that even though they've made it more difficult, for us to pursue those elements. As I mentioned earlier, a good patent, well licensed, is more valuable today than it's ever been in history.
Yeah, absolutely. Well, it gets kind of interesting when you look at this stuff. So David keeps saying serial infringers, and I want to highlight something about that. Prior again to America Invents, the patent holder held presumption that the patent was valid, and that if they assert that you're infringing and have a reasonable amount of proof for that, that you're probably going to be found to actually be infringing. The inter partes review in front of the PTAB is basically a way for an administrative judge who's not confirmed by the Senate, which is a subject of a whole Supreme Court case that is going to have some really interesting impact here shortly, makes a decision. Currently, if I've got my numbers correct, 54% of the patents that appear in front of said administrative judge are invalidated on their face. 29% of them are partially invalidated. So you got an 83% chance that your patent is going to get nuked. And at which point in time you've spent all of your development money, all of your money on prosecuting the patent, all of the carry money on the fees, the money that you've spent in front of the PTAB, and you've got a big bag of nothing at the end. Now, the infringing party, what's it cost them? About $500,000. That's the average cost of bringing an action for inter partes review. And that includes, wrangling experts, putting your claim charts together, making your assertions about why this thing never should have been granted in the first place, finding obscure references in the literature that indicate prior art, all that kind of stuff. That's $500,000, right? And if you do it at scale, it's less than that. So if you're doing a whole bunch of these, then you can bring that down closer to $250,000. So given that, economics, right? The mandate that corporations act in the benefit of their shareholders as opposed to the stakeholders and society takes them straight to a place where it's cheaper for them to infringe, give you the finger, and then try to blow up your patent for $250,000. And if they don't, if you're in that surviving group, that 17% that make it through, then they go to defend it at trial, where they've got 50-50 odds that you're going to prevail, and then you wind up with these enormous settlements that you hear about because they have so thoroughly infringed on the patent that there are many, many, many instances of the infringement that can basically get dinged with a license fee on a per instance basis. One of our clients just recently had a settlement where the judge found that there were over 3 billion infringing instances on the part of the infringer. Now, it was like at 0.00045 of a dollar or something per instance. It was not a staggering amount of money, but think about it, right? These guys were the serial infringer in this case, knew that they were infringing. They baked the technology into their life cycle to the extent that just in the window that was examined, 3 billion instances. That's really different from, I did it once or twice, right? Completely different mindset. So let's talk about how those rates are set, right? Because that's an important part of this. If all I can do is sue, and thanks to the eBay decision, I can't get injunctive relief. I'm going to stick a pin in that for just a second. That's a critical point. Back when I was very active doing this, most of my actions were suits for injunctive relief. Shut the other guy down. My patent, I'm doing my thing. That's actually how I met David. Intertrust nuked the company that I was working with, and cease and desist, right? You can't do that anymore. So all I can do is extract licenses. How do those licenses get set? How does the court figure out what to charge, and what do they use for guidelines to indicate how you might want to think about that?
Well, at the heart, that's a great question, and there's some nuance to the answer. The base idea is to figure out what portion of the value of the unlicensed product is attributable to the invention. So if you take a look at the same invention, let's say we're talking about the ability to work within multiple wireless networks. So if we take that kind of capability as an example, if you integrate that into a smartphone, you're going to get one kind of conclusion about how much value that's providing to the phone. If you work with maybe a hub, a wireless hub, you would say exactly the same technology actually represents a bigger fraction of the value. So one of the first parts of the analysis is to use market data. You'd be surprised, there's some very interesting and sophisticated regression analyses that are used here to identify what portion of the value is attributable to which features, and then you can isolate the feature. Now, so that's one step of the analysis. The other part is to determine, okay, of that fraction, what's a reasonable royalty rate? And of course, a reasonable royalty rate is in the eye of the beholder, but there's an analysis there where you're doing comparisons to the way other components in your field are typically licensed to reach a number. And those numbers can vary quite a bit. They can go all the way from a fraction of 1% all the way up to as high as maybe 8 or even 10%, depending again on the way the licensing regime was put together and depending on how much of the value they really represent of the unlicensed product. I prefer unlicensed to infringing personally. I'm an optimist.
Well, there is that. So if I've got an existing license in place with other people, how does that impact the decisions?
Of course. So that's an area where you can make a big difference. Thanks for highlighting that, Stan. If you put in place a licensing early on in the process, you can set that rate because a court or frankly anybody else, a business analyst, will want to look at comparable values. If somebody else has in an arm's length transaction agreed to pay a particular rate, that's really strong evidence of what the royalty rate ought to be. So you can tilt the field in your favor a bit by putting those kinds of licenses in place. And one of the techniques we use at Aventurine is to establish a license agreement very early on in the life of the business so that we can begin establishing not only the number, but also track record of payments. And once those elements are in place, as I mentioned earlier, you're trying to get those error bars to converge so you get a crisper idea of what the future value will look like. And that is one of the most effective tools that you can use to really zero in on what the future value of the intellectual property is going to be. Once you have a number and you know the size of the whole market, then it comes down to the royalty rate, but also then the level of licensing. So the level of licensing penetration you have in the market. So the other critical ingredient is to have that licensing model in mind. It's not just the number in the agreement, but you're thinking ahead towards litigation. That's why people license. The point of the litigation, actually, the thing you're asking the court to do is require the other party to take a license. So ultimately, the legal actions is licensing by other means. And ideally, once you have established that value, sometimes you'll just do one loss. In the case of Intertrust, we had a major suit against Microsoft Corporation, as it turns out. They were the first of the people to just use the technology for free. And in that model, we were able to really take advantage of this kind of thinking to be able to set a license rate that we could then go around the rest of the market and roll up the rest of it. So the Intertrust technology is licensed by all of the mobile manufacturers. It's Apple, it's of course Google with their Android, Samsung, and all the rest. But all of those things really came down to setting out a well-designed patent portfolio and then getting that first win in court. And then the rest of the market you can pull together. So a litigation plus licensing is not always, but is oftentimes the best way forward. So again, when you're designing your patents, you want to think through what makes a good licensable portfolio on the one hand, and on the other, if you have a chance to set that rate early on in the life cycle, you'll do yourself some real favors, both measuring the value of your IP as well as giving yourself a precedent to point to in court to say this is what the royalty rate ought to be for this unlicensed user.
So it sounds like there might be a way to kill kind of two birds with one stone here, because what we're talking about is the necessity to, you have to think day one about how this is going to litigate. And that basically means that you need to have more than one patent, and you need to keep the folders open to be able to do the continuation in parts. And the other thing is that that's an expensive process, because you have to file and prosecute. And I know from personal experience, if I'm a CEO of a startup and I find myself an extra 30 grand, first thing I'm thinking is not, oh, let's go file another patent. It's let's buy some more marketing here. Let's get some more uptake, or maybe sharpen our tools a little bit. It's not let's go buy another patent. So we've established that you need to think about this from a litigation perspective, because it's inevitable. If your patent is any good, it will be infringed. And you then need to be thinking about what it needs to look like to survive the inevitable process that rolls on the backside of that. And that includes being a densely populated patent, being part of a group of patents, so that if you pick one of them off, the others survive, being constructed in a manner that's commercial first as opposed to science first, and which is helped by keeping the continuation open, and then managing it on a time scale that's very different from the time scale of the company, because you have to think about those returns differently. So, and achieving a early licensing for practice of the patent. So it sounds like that probably leads into some natural conclusions about how you do that.
Well, it does. We'll want, as you're pointing out, you'll want to be thoughtful and plan for each of those kind of key elements. You'll also, as you're working with your investor, you'll want to work in an environment where people will see there's venture capital and what's now being called IP capital in some areas are moving together, and that you're investing both in the creation of this long-lived asset that protects the research for all of its various uses, as well as investing in an operating company that's bringing it to market, usually for the first time. And of course, the magic happens when you get both, when you have a fabulously successful operating company with foundational intellectual property. That's where you get your best multiples. But it's important to think through all of these contingencies, because that may not happen the first time out of the gate. So you want to be certain as you're designing these assets that you give yourself some flexibility. Nobody knows the future. So you want to be certain that when you're designing this, that your patent portfolio is likely to survive whatever crazy things happen to the operating company. And if there's another operating company that needs to be spun up in another market, or there's a licensing opportunity, or there's some of these other elements, that you come up with a way to do that without messing up your operating company. No small startup can afford to go sue Microsoft. But on the other hand, you might need to, in order to really keep the strategy going, in order to avoid efficient infringement. Now, not only do you not have your patent rights, they took your product away from you too. So you're not selling any products. And so in that way, really thinking through the future, thinking about your research as being separate but related to your startup, I think will go a long way. Now, there are specific structures, as you know, Stan, that we use. So we've developed some proprietary investment techniques that allow us to focus on investing in intellectual property and investing in operating companies, and doing that in a systematic and rigorous way. There are other people in the market who are approaching the same issue with that mindset that there is a way of investing in intellectual property. I'll say I think many of them have challenges because existing financial products, as we talked earlier, aren't really a good fit. They used to be, and they're not anymore. And that's another element that we addressed in our model, being sure that we design investment products that are fit the return profile of the asset, rather than whatever people are most comfortable with and have been doing for a long period of time. As lovely as those things are, when they're not fit for purpose, you have to do something else.
Right. Let's see. So back to this. Well, we're running down off of the, I think I've covered all the stuff that I wanted to make sure that we talked about today. We're running at the sort of the 15 minutes till the close mark. So I think if there are any questions, I think I've gone through the chat, seen most of the questions here that we've addressed, at least in part. If anybody else has got questions, we'd be delighted to take those. There's one here that says, please expand on why and when file continuations on your patents, and what are the pros and cons of doing that or not doing that, I would assume.
Right. So the process works happen as you're moving towards the issuance of a patent. You'll have the opportunity to what we're calling keep your file wrapper open, and you do that by filing for continuations. And the way you do that is you work with your prosecution attorney, the person who writes your patents, and you make sure that they're aware that you want to pursue this type of strategy, and then they'll help you through the logistics of how to do it. It's not so different from applying for the patent in the first place in terms of a process, what you do, except you don't have to write the main specification document and produce all those figures. It's just about redrafting those claims. And a lot of times the way you'll do it is you'll want to take a look at the serial infringer's product manual and use that to draft your claims, assuming it's supported by the specification. Now that gets back to the need to have a little bit of a kitchen sink, not a work of literary brilliance in there, so that you have the tools, the words you need to build those claims. And
if you've hypothecated a situation in your kitchen sink about a potential use case that you didn't really quite get right, and you discover down the road that you've actually got somebody doing that, and the ability to go back and prove that claim up is super important.
And one of the other questions was, what motivates you to do this? I'll share. There is no single answer to that. I'll share with you the model that I use, the heuristic I use. The first step I take is to say to myself, is this patent or this cluster of patents bigger than the company that it's in? Meaning, is the company going to do everything that's on this list of elements? Is it really a smaller patent, or is this intellectual property likely to be applicable in other markets? And even as time goes by year 7, you may say, actually, the big market was medical, not security, or something along those lines. You reach those conclusions, and it's your ability to identify that early on. And with foundational IP, the closer it is to foundational, the more of these other markets you'll find. And so that's the first heuristic I use. The basic rule, though, is if it's worth patenting, it's probably worth making a cluster. So you'll probably want to do this in order to give yourself the flexibility. And even if you just keep one continuation in the file and you drag your feet on it, you'll give yourself options down the road. So you'll give yourself, from a procedural point of view, the opportunity to revisit this issue later. So in a way, you're buying an insurance policy, and if you need that insurance policy, you've opened up the specifics that you'll need in order to make it really pay.
And that seems like a pretty low-cost option.
It is. It is. It's some filing fees, and again, the drafting is much less expensive typically because you're only creating claims.
So, given the state of play in the United States, how do things work if I go from a U.S.-based patent into PCT and WIPO and the various international jurisdictions that you might want to address?
Well, all jurisdictions are not created equal. There are definitely places where your so-called foreign counterparts, so that's your patent, sometimes translated into another language that's been prosecuted in a different patent office. So, there are rules around PCT and WIPO. These are international agreements that describe how inventors in one country go about getting patent protection in other countries. And the two places that in the world where you really have the best shot, typically because injunctions are still available, are Germany and China, interestingly enough. Chinese IP rights are really rigorous. There was a reputation that China developed many, many years ago when I first started doing business there back in the 90s, that somehow China wasn't going to be an IP powerhouse. To the contrary, like I think a lot of people discuss, once you have valuable intellectual property of your own, suddenly other people's IP rights look a lot better to you. And so as China has developed technologically and now leads the world in several key research areas, there's a very strong incentive there. Now, Germany is another place that you typically are able to really enforce more efficiently. Now, there's recently been some changes just recently in what's going on in Germany, where there may be a question about how well that system works, but how well it will continue to work, where the ability to gain an injunction in Germany has now been narrowed a little bit. But again, like some of the United States used to be, in the way China is now, because they have so much valuable intellectual property, they want to see other people's non-nationals. They want to see their intellectual property protected too. So that element has really takes a prominent role when you're designing your foreign counterparts. So you want to look at where can you enforce most effectively, but you also want to be sure that you cover the manufacturing. If there's a manufacturing element and you're making things in Indonesia, you're probably going to want an Indonesian patent. You'll want to reach around the world in each of the areas where you think your key customers are going to be located as well. Now, sometimes that's easy. It's just the EU and the United States, or in some locales in East Asia, it's simple. In other cases, you have to really dig into the supply chain. And as I mentioned earlier, and we've been talking about, the key thing to a patent is that all the elements in the claim, each and every element has to be practiced. And so as you think about your claim design and you think about your enforcement strategy, you want to be sure that you have some claims that are targeting the manufacturing process and some that are targeting other elements of the process. So again, you're designing this based not on scientific principles, but commercial principles. How is this new engineering based on new science oftentimes really going to play out in the world? And that's where you want to concentrate your energies on the IP front.
Yeah, totally makes sense. Yeah, Germany used to be a favorite place for going after in unlicensed use in standards essential patents. As a bunch of practicing IEEs here, one of the things that you're likely to run into at some point in your career is the opportunity to participate in the design of something that becomes part of a standard. If that happens, your patent will be designated standards essential. In other words, in order to make Wi-Fi, you have to license this patent. Well, the requirements on that are that you freely offer it for license so that people can pay you on fair, reasonable, and non-discriminatory rates. But there's no contrapositive aspect of that requires somebody to take the license. So people can manufacture the product, be infringing on the patent, and there's not really much that you can do about it, at least in the United States, given that you can't really get injunctive relief anymore. You have to litigate them then on infringement and then try to seek a license. It takes a long time, really expensive, and you may fail. In Germany, however, they were really great about that. It's like, oh, standard essential patent, you're alleged to be infringing. How about an injunction now, right? It's a great place to litigate on that stuff. Sad to see that being diminished. China is also super interesting as they've gotten more progressive. Just this year, China issued their fourth amendment to the Chinese IP law suite. Insight IP published a report on that was sponsored by LexisNexis, which makes really interesting reading on understanding what you need to do in China. If you can either search for that or you can shoot me an email after, and I can throw you either a copy of the PDF or the link. But it's a different world. It's that we've gotten ourselves into. Patents are still at the root of innovation. That disclosure of learning that fundamentally moves the evolution of society ahead, just through its disclosure, in exchange for primacy for a period of time is I think one of the, that's right on up there with fire as far as quality of inventions in terms of having moved us from the Paleolithic age until where we are now. But it's a fluid field. It's fixed. It's not fixed. It's ever changing. And it's something that's important to stay on top of. A lot of people, practitioners, particularly engineers, scientists, have ideas about patents, what they are, how they work, that are formed off of popular media and off of common sense that some of which is no longer applicable. And speaking for myself, I'm grateful for the opportunity to have a chance to influence people's thoughts and actions with how they think about this. Around our office, we talk about making it safe to invent again, and we're really serious about that. We think that inventors have gotten the shaft for a number of years for a variety of reasons, and as inventors ourselves, would kind of like to see that change. David, do you have any closing remarks before we let these fine people get on with their days?
Well, I want to thank all of the organizations who sponsored us here again. It's great to have an opportunity to talk about one of our very favorite subjects, and I think it's just crucial what you said. The reason we built this business was to create the company we wish existed when we were out doing this kind of work. So our goal is venturing, and I think there are others out there who are similarly trying to do the same kind of thing. To your point, how can we overcome some of these hurdles and really make the world safe for invention again?
Yeah. All right. Thank you again so very much. Joseph, I'm going to turn it back over to you.
Okay. Oh, thank you very much, David and Stan.